Really, anyone who is in real estate investing full time or even part time at this point, there's really no reason to allow it to just depreciate straight line and let the government just give you a little bit back, every single year. Accelerate that depreciation. That's going to free up cash flow for you, whether that's to put that into new projects and into your next, real estate rental, or if it's just to keep a little bit more money in your pocket and not pay as much in taxes that year. So if you're in the rental game, it makes sense to do a cost seg, especially now that we've really opened up the space a bit more. Back in the day, people thought, it's only for rental properties that were worth multiple millions of dollars, millions of dollars spent because in the traditional sense, a fully engineered cost segregation report, someone's going out to the site, they're coming back, it's taking months to produce that report. You're getting that report and it's costing you, at a minimum like $5,000, $6,000. So it was really cost prohibitive for some of those lower single family residences, $300,000, less than that. The math didn't make sense when you're paying that much for the report. It ate up all the benefit that the report was giving to you.
Okay.
So we've really tried to, allow more people to come into the space by lowering the price and change the way we do things.
All right, now let's do a full rewind and do a. Well, usually I start with this, but just to kind of give some people some background about what cost seg is.
Yeah.
Um, so tell us your story. How did you get involved in this? What led you here, and kind of what does your business look like today?
Totally. So I actually worked for our sister company about 10 years ago. We have a sister company that does the fully engineered cost seg reports. So I was in just the real estate industry as a real estate agent, property manager, that sort of thing to begin with. I got the job with our sister company and sort of learned the ins and the outs of cost segregation from them. So that was, like traveling 2 weeks out of every month and doing those site inspections to gather that information, come back, produce the report, and then do it all over again. About 8 years ago, we were just talking and we realized, with the way technology's going and the world's moving, some of these other industries just aren't keeping up, in that same vein. So we said, hey, we could bring cost segregation to a broader audience by bringing it online. And, instead of someone going out to the site to gather that information that would typically be gathered on the site visit, let's get that directly from the client or their CPA. So we built out, a bunch of forms where, we went through and said, hey, these are all the things that we're looking for in the checklist that we're using while we're out on site. Let's, just get that information directly from the client. And that's sort of how DIY was born. I have other co-owners as well and their backgrounds in engineering. The other one was a contractor for the state of Florida for over 20 years. And then we have another advisor who has their master's in real estate tax. So it's really a team effort and just trying to bring cost segregation as sort of the intersection of engineering, tax, construction, real estate. So you
Mhm.
need all of those components to come together and to create, a cost seg report. So I came more from that real estate background and learned the cost seg side of things, whereas some of the other co-owners, they came, from the architecture or engineering background and the construction background, and also learned the tax side. And then we obviously have our partner who, focuses on the tax side a bit more.